Let me give you my background, okay, just real quick. I'm Kip Twitchell. My vlog entry yesterday, I released on LinkedIn, was about having worked on the same problem for 30 years. My first class on financial systems in college was 30 years ago in September. And I was introduced to an idea from a man named Bill McCarthy, professor at Michigan State University, who wrote an article called Resources, Events, and Agents. And what he said was, why do we have a financial system? Why do we have an accounting system? Why do we have a general ledger at all? In the 1980s, as shared databases were starting to become available, the idea, he said, well, wait a minute, I have all the transactions stored in a shared database. Why can't I just go gather up those transactions and make my financial statement at the moment I need them?
On demand.
On demand. Why do we have to have a general ledger? So what's your thoughts? What do you think? Why do we have to have a general ledger? Do you know what a general ledger is? Maybe we should start. Let's go back to basics. We did a little bit yesterday, okay? So let's lay some foundation about financial data, because there's some principles on financial data that are kind of important, okay? So let's use, you might not have worked on a big financial system. I don't know if your background.
No.
Okay. So let's just think about your personal finances, okay? Because you know your personal data. So let's imagine we wanted to build machine learning algorithms that help you predict your spending, okay? And we want to make the richest data set possible from you, and maybe we'll do this for everyone in this building, of all the financial data that would help us make the best predictions about how people spend money. Okay, so what would we want? What would we want our data to look like? What's going to be our source data for doing that kind of prediction?
Transactions.
Transactions, okay, good. So we're going to start with transactions. And so what kinds of transactions?
Debit and credit.
Okay.
What is coming in?
Okay.
Salary.
So we've got salary.
Yeah.
Okay. And what else? And then payments.
Payments.
Okay, but you need to get. Let's be more specific. Okay. As we kind of talked about yesterday, if we go with payments, what are we going to be able to predict? What information would we lose if all we have is payments?
No, the type of payments differ because few payments will be very your grocery payment versus your home loan.
Okay.
So your mortgage will have it separate. Your auto car thing will be separate.
Okay.
And then your daily kind of expenditure. If you have a child, you can take up the school fees going every quarter.
Okay. So those are all good, but I'm trying to drive to something a little bit more specific. When you go to the store and you pay for something with your credit card, you get on your credit card statement.
Summarized.
So what is that? What?
That is your total.
It's a total payment.
Yeah, it doesn't have the itemized.
So that's what I was trying to get to, right?
Yeah.
So let's say we don't really want payments. Maybe we want payments, is good, but it's not adequate, is it? We actually want line item detail, don't we? Okay? Okay. So let's just start with that. Let's do a quick estimate on the data volumes, okay? Because we're going to use, let's assume we're going to use Excel. That's the tool people do for their personal finances, okay? So we want to make sure that what we're going to do is going to fit in Excel, okay? So what's going to be our, if we go to line items, what's going to be our estimated data volumes for you as a person, for typical people?
10 transactions per day.
Yeah, okay. How many transactions per day would you maybe have?
10.
10? Okay, let's go 10. I think 10 per day.
So average.
That's a pretty high.
Okay.
Not average.
Okay, so
No, that's
no,
fine.
okay.
No,
No, let's go with 5.
No, 5, 10 is not the thing. I think that's a good number. But more important is that I mean, the transaction is done, but there's always changes to the transaction. That's where, right? You may dispute a fee.
Okay.
Yeah.
But that's not going to add a lot of volume.
Right.
No. So let's just do the
Yeah,
quick
I mean,
volume.
yeah, that doesn't necessarily add a lot of volume.
A lot of
Yeah,
volume.
yeah.
So let's do maybe 5 transactions per day. How many line items on average would there be on each transaction? If you were grocery shopping,
Minimum
I will like 100.
No, per day could be minimum of 10, let's say, for a grocery.
but let's average. We want to average in the groceries as well. We're going to do a simple calculation here. So
Right.
should we go with, what do you think? 10? Is 10 good, or is it 20? 20?
20, yeah.
20. Okay, we'll do 20 line items.
Yeah.
Okay.
Yeah,
Okay.
I think 25 to 20, 100.
Okay.
Yeah.
Because we're gonna have. I mean, utility payments don't have a lot of line items,
Yeah.
right? So we'll have a lot of
Yeah.
stuff that are single line item sorts of things. Okay. Then how many? So we're gonna go. Is this 365 days?
Mm-hmm.
Okay. And then, if we really want to get to good predicting capabilities, how many years would we want to cover?
Predictive Basel recommendation 3 years.
No. This is personal. We're doing.
Oh, for personal.
No. If you really want to do, if we want to be very powerful
Yeah.
in what we can predict, how many years of data would we want? How does your spending?
I would say 2 years minimum.
No. Listen, your spending. How does your spending go over the course of your life? Do you know what?
Oh, you're talking
Over the
life
course
or
of
you're talking season?
over the course of your life, your highest spending patterns are when you are 50 years old.
Yeah.
Right.
Okay, so if we're going to make predictions about spending,
Yeah.
we're going to be trying to gather people's life spending patterns.
Right.
Okay, so let's say that life spending patterns, you have a spending habits probably in the 60 to 70 year range, right? We don't really care about 1 to 10.
Mhm.
Not a lot of activity there,
Yeah.
right? Okay, and so let's take, since we're going to do an average population, let's use 35
Yeah.
as our average age, right? Okay. Now, I don't know, somebody want to just do a quick multiplication? How many line items?
100 and 365, 00.
No, you don't multiply the 5,
36500.
right? 20 line items is
It's 20 line items on 5 transactions per day, yeah, it's
Okay.
multiplied.
100 and 365,
36500 into 50. Right?
Plus
35.
35?
Yeah. Yeah.
Come on, somebody pull up your calculator.
Into 25.
Give us a number.
Yeah.
Give us a number.
83 plus 3 and 5.
so it is big.
How many? What do you get? Oh, 1.2 million.
Yeah.
1.3 million. Transactions. Line items.
Never thought of generating that much data.
Okay, so now let's go a little bit further though, okay? Because if, to the theory that I talked about in 1980, Bill McCarthy's idea is if I have this sort of data set, is there any financial report I cannot produce at any point in time?
No.
No. If you have the transaction data, you could produce any financial report you wanted as of any point in time. Plus, you can do any sort of management reporting. You could do any sort of risk reporting. I mean, if you've captured attributes on these transactions, you can now produce any analysis that you want. Okay, so let's think about what are some of the kinds of analysis we might be interested in producing. Okay, out of that, what are the kinds of things that we might be interested for people to know?
Mortgage payment ability.
Okay, mortgage payment ability. So what would help
So
us?
basically, if your salary is say 100,
Okay.
right, and if your spending is 40,
Okay.
right? You cannot pay a mortgage of
So
70. right?
disposable income. What is the disposable income?
You've gone exactly the right place. Okay. So the problem, yes, we have the data that can do that. But part of what we need to do that analysis is we have to create a period in time view, right? Okay.
Patterns.
In financial systems, what is a period in time view called? It's not a transaction.
Snapshot.
Snapshot's one word, but not a typical word, not the most common word. Any ideas? It's called a balance.
Oh, time balance.
A balance. No, a balance. So we have transactions, right? And we have balances.
Yeah.
The balances. See, here's the crux to the problem. When you make a balance, you've basically made a duplicate of the transactions. Because a balance represents an aggregation of transactions.
But if you say balance end of day, only one row per.
That's right. So it's not a lot of volume, right? So you're exactly right. Balances have a lot of value to us because they can reduce transaction volumes dramatically.
Yeah. Closing balance.
Right. Okay, so let's go back to your analysis point, right? Let's say on January 1st through April 1st, okay, we have a set of transactions going on here, right? Now we want to predict, well, we have everything before that as well.
Yeah.
Okay, we want to predict how much money does this person have on hand as of this date? How do we get there? How do we create that balance?
So you have the starting amount, assuming it's
Let's
The
assume zero.
opening balance.
We're gonna assume that we started with zero,
right.
right?
So you add
We're adding everything up,
and
pluses
subtract.
and minuses, and
Yes.
subtracting the transactions, and that gives us the
A closing
the
balance.
cash
Yeah.
position on that day, right?
Right.
Okay. And then we can take and say, okay, we could make actually some new transactions that are projected expenses, couldn't we?
Yes. Yeah.
Okay, so they aren't. Oh, no, wait a minute. So now we've taken our 1.3 million, and what have we done? We've created a new set of transactions called
Balances.
forecast. No, we've created some balances, but we've also created. Yes, we've created some forecast, right? Forecasted transactions. Okay, so we would want to use the forecast transactions to go against the cash position to get us a sense of will we have any money?
You'd also need the forecasted salary.
Yes, it also
So
means
transaction will be both plus and minus.
yes,
Yeah. So what is coming in, what is
Yes.
going
Going
out,
out,
both you need to
all
know.
of those kinds of
All
things.
this, yeah.
Okay. So once we do it for this day, though, then we have the transactions that happen on April 1st. So we've used forecasted transactions. Now we're going to end up with a set of things that are actual transactions.
It's very difficult to forecast transactions.
Well,
It's easier for forecast summaries.
is that right?
I mean, certain transactions, we won't get, there are some, your school fees are payable. You can say, I can predict it's going to occur. There are, but specifically, you will have to categorize the expenses.
Wait a minute, though.
You could do that.
If I have all of the transactions that I've spent for the last 4 months,
Right.
how hard is it for me to make these forecasted
So
transactions?
the reason I'm saying that, I won't get into this, is that you can forecast how much I will spend on grocery today or this week. I can't forecast whether I'm going to buy a Pepsi bottle now
Yes.
or whether I'm going to buy chewing gum 3 hours later.
That's
Summary
right.
of grocery.
Yeah.
No, that's true.
So,
But
so basically, unless you do some level of aggregation, your forecasting you have too much variance in the system to forecast.
Exactly.
okay, But to the point, the greater the level of detail I have on actual spending,
Right.
the more accurate my forecast can be. I can use variances off of, hey,
Agreed. That it gives you more flexibility
Here's-
to do the aggregation.
here's been my standard deviation on each day from what I could even, if I kept my forecast transactions, and I had forecast transactions over these periods as well, and I compared them to actuals, I can start to get the standard deviation. When I go make my forecast, I can predict what my variation is going to
But
be
I
as
have
well.
a question here. So macroeconomic play a big role here because inflation we don't know. Grocery.
That's right.
Yeah, grocery. I'm like spending 100, but maybe tomorrow it's not 100 rupees. It's
Yep,
more
yep.
than
So,
that.
so
But
And also, like
Surabhi, to your
But-
I
point,
just lost the
macro-
drops of. I mean, I
Yes,
cannot.
that's-
Yeah.
That's a event which
That's
can
an
sort of.
event. That's how we're going to that's what we have to predict first. Because whether I'll be having a job tomorrow or not, then only I can.
okay, so good. And now we've been living in a bit of the world of la la land, haven't we?
Yeah.
How much, for you personally, if you wanted to go home today and gather up your transaction history, how much data could you go find?
Not not the line item level, but you can look at your bank
If
statement.
you're one
So-
of those
so what is your
people
bank-
who
what is your
keep
bank statement?
bills,
What does your bank
You know,
statement give you, though?
Mostly
So
online.
each of the total transaction that you have had.
For how long could you go back and get it?
I guess if I want, I can go to a couple of years. 1 year
Couple
is
years.
available.
Yeah, so it's a
Yeah.
couple years.
Yeah.
You might be able to get a couple of years,
Couple of
but
years.
you're not going to get line items.
Right.
You're going to get payments,
Payments, yeah.
aren't you?
Yes.
For 2 years,
Yeah.
right?
Yeah.
So why is that?
Because that's about the data
It's
that.
a-
But why
So because
is that all you can get?
1.3 million records per me, it's pretty difficult for a bank to hold. So they just
No,
aggregate and keep it
no.
somewhere.
They
No.
may hold it.
No, no,
but
no,
the
no.
question, what are you going to do if you
No,
download
no,
one
no, they
million
don't.
resources?
For
She's-
me,
she's-
my past history is 1.3 million records for a year. So if rather than half of it, they can keep it somewhere.
Listen,
One pen.
you're exactly the point. The reason we don't keep it is because the cost,
Yeah.
the storage cost of the data. So
I do agree on the cost, but more importantly, what's the benefit? I mean, you get all of this, right? I mean, is any individual at all interested in? I mean, I bought one line item level. I bought an apple today.
yeah, so let's talk about that. Do you think there really is interest in that? How much do you think Google makes off of analyzing your clicks on a browser?
Yeah,
Yes.
billions.
They make tons of money. And how much more valuable is your purchase history compared to clicks on a browser? That stuff is like astronomically more valuable than what goes on in a click.
It's
Click
got
stream.
a company with
What
like.
Sujoy is, it's not interesting to Sujoy, but it's
Oh,
it's
But Amazon wants
This is
to
the
know.
guy who wants to
Amazon
sell
wants
to
to
you.
You know
know.
what it drives today? It drives what's called financial services.
Yeah.
But I just wanted to understand a little bit more. So when we talk about this line items, yes, that is for an individual, right? And we get a macroscopic user behavior pattern if we have a better
Your financials,
scale. Yeah,
basically.
and also, and if you have a line item, for instance, we were talking about a Pepsi or a chewing gum, etc. So if we have a history over there like that,
Mhm.
at times, at least if I have bought it, then there is a chance always that I can buy something. So it's kind of I can't go into a microscopic level, but still a macroscopic behavior. So there is a point in what I understand what you're making. Like if we can have a macroscopic behavior, and you spoke about the attributes, right? So for instance, if we are never looking at an individual as an individual, we can't look at it. As you showed the profile of changing patterns, the attributes are also our family members, let's say kids, all these things are changing. So at points, if you check in a periodic view, we can really get a macroscopic behavior with respect to which we can do a prediction.
But to the point that Google or say Amazon is interested, the reason why Amazon is interested is like just you said. I mean, are people buying Pepsi? See in summer, they're buying. Apparently, they're buying more Pepsi in summer, and by how much? So because Amazon is looking at it or Google is looking at it across multiple users, they're looking at patterns. But if I am given, suppose my bank, they say, okay, data is not, for me, I request them, and they keep 2 years of every transaction that I've made, and they give that to me. But I would be able to do anything with that.
Why not though? Listen,
because
if
because it's an inundation of data.
so the data volumes are too much for you.
Not the data volumes. The thing is, the sort of decision I'd be taking at a point of time.
Listen, how can you set up now with your bank? Can you ask them to tell you to give you an alert if they have not seen your rent payment coming through
Yes.
by the 10th of the month?
Yes,
Can you do that?
yes.
Do you think there's other more sophisticated machine learning questions that you could ask your bank to alert you about? Do they give you that option today? No, they don't give you that option today. Would that, and that's on a micro level. That's based upon your spending patterns for the last whatever. They could tell you, you know what? You ought to be looking at maybe you've got increasing income here we see over the last 4 months. You might have been thinking about savings, a different kind of savings vehicle. We're looking at your spending patterns, and gosh, you just paid off your house. Have you thought about starting to invest?
That they do, right?
How sophisticated are they in those analysis?
It's not sophisticated.
It's not. It's not sophisticated. Let me tell you. Here's the reason for it. How have our systems been built? Let's go back to the let's go way back. Let's go back to 1494. There's a guy named Luca Pacioli. Okay, he documented the accounting cycle. Okay, he was the one that talked about bookkeeping in the first instance. Well, there's a whole lot when you did it back, huh?
Right.
When you did it, when you do it this way, what is the cost of your computing in 1494 through?
When was double entry invented?
Yes, it's double entry. He was the first one that documented double entry accounting.
Okay.
And what was the cost of the computer in these years? It's called staff. It's people.
Yes, people.
It's clerks. It's brains. The
Yeah.
CPUs are called brains. Okay? Okay. So in the 1950s to 60s, we started automating things. Okay? So how expensive was a computer in 1960? Any ideas? Let me give you a different question.
1960.
Let me
I've
give you-
seen the
expensive.
1956 IBM 500 drive picture.
Okay, let me ask you this question. If you wanted to buy this phone in 1991, how much would this phone have cost you in 1991?
Somewhere billions.
No, it would have been
Millions.
It would have been $3.4 million.
Okay.
It would have been $1.4 million for the memory alone.
Yeah.
Okay,
The
so
most interesting thing that I read some time back is that the Apple mission, the computer at that, its specs, if you look, it's as bad as a Raspberry Pi today.
Yeah.
So
Apple specs are
okay, so if we take 1991 for this computer, and we go back to 1970, right? Listen, this cost curve is huge.
Yeah.
Okay, so staff were expensive, but when you started automating, when you started using computers, they were expensive. So how could you use a computer? How do you make it cost effective? What is the thing you do to make the computer cost effective for financial? Pardon me? You aggregate. You create balances.
Storage was very expensive. So
But-
like,
But we would aggregate and make balances. You wouldn't keep any of the transactions. You would say, as of a point in time, we have this much money.
yeah,
And then you'd have a bunch of transactions, and at the end of the transaction period, you'd take the balance, you'd update the balance with the transactions, and you'd store the new balance, and you'd throw away the transactions.
right.
Okay.
Point in time balance of the people.
So if we take our data, so if blue is our cost, but if red is data, okay, back here, the amount of data we could keep was very low. We could not keep very much data at all. Okay, this trend line is continued. Because as compute cost reduced, as we had more and more compute cost, we captured more and more data. Okay? The problem is, for our financial systems, when did they mostly get constructed? How old are our business financial systems?
70s, I guess.
1970s for banking. What about for manufacturing?
90s.
What happened in the 90s? What's the major trend?
Database.
SAP.
ERP systems. ERP systems. Okay, so what's happened to our data since the 1990s? And what's happened to our compute cost since the 1990s? They've been growing.
Come down and that.
Okay, but we are using the same system architecture in all of our business systems
Yeah.
as was invented here.
Right.
And that's why none of your transaction data is kept anywhere. That's why you can't get at it, and that's why no one is using it, because the systems were built to throw it away. That's the crux. We're living with a very old system architecture for financial systems.
Right.
No, so I do agree that the history is, I mean, that's why we are here.
Mm-hmm.
But the point also is, I mean, people have been talking about keeping transaction data. In telecom, people have been keeping call data records for
Yes.
loads of years, right?
Yeah.
The question is the benefit that people have been able to get out of those those low granularity data, right? I mean, is also very small, and part of the reason is, number one, you end up with too much data. Therefore, to process that data, you need a strong
so
compute power.
it's a cost problem.
Yeah, but
One
that's-
is cost.
but-
So my point is that one of the reasons why it's being aggregated is also that, I mean, what do you do with that sort of data
You know,
has not been very clear.
Well, no.
To sort of,
You're ignoring the fact of what we do with that data today.
And we have not seen into those possibilities. So think about the Google is telling me these days your flight is delayed because my itinerary is stored in my Gmail,
Right.
and your flight, and there is a traffic because my location they're tracking, and they're telling me to go a bit early.
Yep.
I have a
Yeah.
Google Assistant, so it's telling me like you start 20 minutes.
yeah, so
early.
Google has found a use case companion
Listen,
My
listen.
to keep that granular data.
How much?
I don't have granularity, right? But visiting a hospital.
So
very
the thing
frequent.
is, there is also other reason the banks have to keep the transaction, the regulator.
Yes.
Right.
Listen,
I mean,
but listen. How
yeah.
much cost do we spend on reporting systems in today's business? We spend huge amounts. You know what that is? That's value we get out of this transactional data, and the cost of it is enormous. So let's say let's just do some calculation here. Let's go to the attributes on those transactions. Okay? How many balances can be made off of a 5 attribute table? Okay? You have any idea what the formula would be to calculate how many balances you can make if you have a data set with 5 attributes and an amount?
What do you mean by how many balances?
How many permutations?
Uh-huh.
So if this is, for example, company, okay, and I have a list of companies here. Let's say we have 5 companies,
Right.
3, 4, 5,
Yeah.
okay, and I want to know what my balance
If
is.
each are 5, then you get 5 to the power
So
of
I-
5 combinations.
Yes, it's a question of how many attributes I have in each one of these. If this is cost center, okay, that's a typical financial attribute. If I have 5 cost centers, right, now I can make 25 different permutations off of that. Okay, so how many attributes do we keep in our financial systems today? On the transactions, subsequent tracking through businesses, I'll tell you what, it's many more than 5. And the possible permutations that we create off of those to give perspective as to how much is company 1's balance, what's their net income for the month, company 2, what's the net income for the day, company 3. So if one of these is time, because that often is a perspective we get in financial reporting, we're blowing up. So now what happens in this whole volume issue is if this is volume of data, okay, and we have balances, actually I think I want to go to the little, how do I do this? Transactions and balances, okay. We agreed that we had 1.3 million transactions, right? Okay, now if we start to go make those balances that we talked about to give ourselves a perspective of what's happening at particular times, and we only have 5 attributes on our transactions, maybe place, vendor, type of purchase, date, those kinds of things. You start to take 1.3 million of those and you start to take the possible combinations here, and you know what you can end up with? You can end up with a huge number of balances made off of that set of transactions, because all of the different permutations for all of the different time periods is a huge amount of data. Now what happens when you do that? If we go back to cost and permutations, okay. And I want, trying to remember the graph, how I drew this before. If I take and I start to make aggregations, okay, so my number of permutations grows, okay? My response time of the computing environment to any question declines, right? Because every time I ask a question of the system for a particular, right? Over here, if I have no aggregations, if I've made no balances, and I ask a question, I have to aggregate I might have to aggregate or scan or select out of 1.3 million. It can be a very long process to go make a balance on the response time curve, okay? But if I've made an aggregate and I ask a question and that aggregate answers that question, then my response time drops, okay? Okay, but the other problem that happens is every time I make an aggregate, my time to process a transaction increases. Because now, when it's over here and I have a single transaction, I just add it to the end of the file. I have no additional processing, it adds the transaction to the end of the file. But when if I have 1,000 aggregates that might be affected by that transaction, now when I do a transaction, I have to go update 1,000 balances to reflect the impact of that transaction.
Right.
This whole thing is what's going on in all of our financial systems all over the world. And I'm the only person in the world that's talking about it. I'm the only person that's talking about, can we do something different?
Yeah, some trade-off analysis has to be done to figure out which is whether you do computations every time, real time, and keep all the transactions, or you keep aggregates. And
if your aggregates, so suppose you have 5 attributes.
is there a formula for that?
No, you have 5 attributes. and you're always aggregating on all 5.
Then it makes sense to
So then just there's only one row which will always get updated.
No,
Because-
but you don't want to aggregate on all 5 because you're not asking every question about all 5 attributes.
No, so that typically, so when you look at traditional data warehouse designs,
Yes.
right? So all of these attributes are your dimensions, right? And you aggregate it, you keep pre-aggregated copies at the combinations of the dimensions. Now, if someone wants 3 dimensions of that, then because it's already aggregated, your data volume is much smaller.
Much smaller.
And so,
Yes.
you can on the fly do the rest of the aggregation.
Yes,
then
it
pull
still
it
takes,
out.
but it still takes time. It still
It
takes computing
takes
costs.
time. It
Yes.
takes time. And if you think that even then even that is much big, you can have another layer of
That's
of
right. So
aggregation.
so you aggregate. If it takes too long to aggregate 3 attributes to 1, then you make another aggregate that is 1 attribute.
Right.
Okay. Now here's the problem, though. Going back to Thomas's point, how will you stand for your bank if they lose one of your transactions? How long would you stand for them dropping one of your transactions?
Right.
You won't, will you?
As long as it is they forgot a payment,
So good. I've got some banks that I'll refer you to that you might be interested in using. Okay? Listen, you don't stand for it. Nobody stands for losing transactions.
Yeah.
Okay, so when we get to this part of the problem on the aggregate structure, the thing that you've created here that's a huge cost is not just the cost of updating these, it's a cost of something called reconciliation. Because everyone
Yeah.
demands that all of these things be right.
I'm sorry,
And-
this curve is the response time or the storage?
This is response time, this is the storage.
This is the storage, okay.
It's the number of aggregates.
Right.
These are the balances that we're making.
Okay.
The more balances you make,
Mm-hmm.
the higher your reconciliation cost because you have to make sure
Yeah.
that every one of those things agrees to everything else.
But you have to adapt
And
some
guess what?
rules. Yeah.
Reconciliation is
Yeah.
something that cannot be fully automated. The testing for reconciliation can be automated to make sure that if they equal, because you can re-add up 3 balances to see that it equals the 1 balance.
Right.
But if they don't add up, you can't automate it. You can't automate finding out why it doesn't add up.
Yeah.
It requires human intervention whenever you have breakage in reconciliation.
Yes.
Huge.
Yeah. You could.
I
I
s-
always wondered about that. I mean, but you could put as many.
But
Yeah.
No, so
That's a different. Yeah.
So the
I mean,
problem that happens is, especially with, so I'm saying this happens a lot in telecom. My background is more in the telecom, and I think it's the same thing with financial sector also, is that because many updates that would happen would be
Yeah.
in the past, right?
Yeah.
So then if you have a small update and then you need to reconcile it and it sort of goes out of
Haywire.
step, right?
Haywire, yeah.
Then it's difficult to which piece had actually gone out of step and how much is the delta. It's far more, you actually hit a possibility of a combinatorial explosion there.
okay, but let's go. Telecom has huge volumes. I mean, let's talk about it for a minute. Out of all the businesses you have interaction with, which company do you have the most interaction with? Which company do you create the most transactions with? Your telecom. Every call, every text is a transaction. By and away, they have the highest data volumes for customers.
Who?
Telecoms.
Yeah. Telecom. Yeah. We
Okay.
make more.
And nowadays it's become data sessions.
But here's the difference of the next. You step down from that and you start into financial services. Okay. But the difference between telecom and financial services is how much reporting
Yes.
do we do by adding up minutes by different permutation of the minutes on a call for customers. We do hardly any.
Right.
Right? The telecom database mostly gets partitioned by telephone number, right? The problem when you get to financial services, the permutations we create on financial services data It's huge. It's,
And like I said, the other problem is, I mean, the cost of a mistake on telecom is, I mean, if one call is
It's not a big
So
deal.
yeah, here it's one paise.
right.
yeah, right. Okay, so let's talk about two. We're going to talk about the daily financial cycle. Okay, because the problem with finance data is there's a daily financial cycle. It's driven by time. Okay, and the key point on time is 8 a.m. Okay? We start business for the day. We have to know what our position is at the start of the day. You have to have processed all the financial data from the prior day, and you have to know at this point in time what is our position. Okay? So we're going to back up. Let's go over here to end of business day. Okay, the day before, so 5 p.m. or so, maybe until 10 p.m. depending upon the industry and whatever, right? Okay, so throughout the whole day here, we've had our operational transaction systems. I've been capturing transactions throughout the day, okay? Come this point is when the activity drops off for the system. So because we're using an architecture that was designed in 1494 by Luca Pacioli in Venice, Italy, okay? We start the process of computing, heavy intensive computing right here. And what goes on in every bank in the world, but most of the manufacturing companies as well, most of the ERP companies in the world, and retail, everybody, is that there's a long period of time when the operational systems post to customer balances. Posting, if we would have been, if you've been in these jobs in 1960, you all would have known what that word meant because everybody worked on them. Posting is taking transactions and updating a balance. That's a posting process. I asked a head of a elite U.S. university accounting program 2 months ago, do you know what posting is? And he said, no. I said, you're an accountant. You run an accounting university and you don't know what posting is because everybody has
Posting
forgotten.
into the ledger.
Everyone has forgotten what that term means. It's taking transactions and creating balances. And yet this happens in hundreds, millions of business systems every night.
Yeah.
And it's all automated and everybody's forgotten it. But it's posting to the customer balances. This is a customer perspective.
Yeah.
So your checking account balance, all of your transactions that you do in your current account, it gets updated on that. All of your transactions for your credit card gets updated in the middle of the night. Everything to your savings account, everything to your mortgage, everything, car, auto, loan, all of those things update. And at the end of this process, you have an outstanding balance for each one of those products for your specific name as a customer. Okay? That's nice. But it's not going to satisfy this problem because this problem is not a customer perspective. This is a company perspective. Okay? So now we've taken until, in some cases, 2 a.m. to go do all of this detailed work on the transactions.
Yeah.
In some cases, it goes clear until 5 a.m. Right? So we've taken, the bulk of the time has been absorbed by all of this detailed data. Now, the company perspective, though, includes all of those transactions that were done for every customer. The company is the other side of the transaction. So effectively, if I'm going to maintain two perspectives, I'm going to maintain a customer perspective and an enterprise perspective, then I've got to process the data twice, all of it. I've got to do it once to get to the customer perspective, and I've got to go through all of that data again to get to the company perspective.
Right.
Well, how in the crud are we going to use the bulk of the time here, and in this little bit of time that's left, we're going to go redo all of that again?
No. Aggregate this.
We aggregate it. We aggregate, and this is what's called the general ledger posting. And to aggregate, what's the easiest thing to drop out of this data to get to there? What's the key attribute?
Customer ID.
Customer. We drop customer. We completely lose it. Okay? Okay. So now we do, in this time period, we're doing, hundreds of, in a large corporation, hundreds of millions of things here. We're doing tens of thousands of things here.
Mm-hmm.
Okay, now here's what the problem with the balance is. A balance, if it's right, we'll assume that our posting process works right. And you ask at this point, how much did I make yesterday in this kind of product?
Mm-hmm.
You'll be able to get that answer because in our general ledger we have a product attribute and we have the amount. Okay? So it'll be able to tell you that.
Yeah.
Okay, here's the next problem though. When you open your bank statement, what is the first number you look at?
Balance.
The balance. You look at the ending balance.
Yeah, closing.
Okay, and what decision do you make when you look at that balance? What's the next thing you do after you look at the balance?
Decide whether to spend or not.
No, you first say to yourself, do I believe that? Is that right?
That is true.
That's
almost so ingrained.
That's right.
Probably
That's
don't
the
even
first.
take that.
That's the first question. Okay, so let's
Yeah.
say that comes back, and you say, "That's not what I expected." Then
Yeah.
what's the next thing that you do?
You check to see.
You
the-
check.
You
Yeah.
check.
No,
You
that's
You
a
go
good
find.
point.
You go
I
find
never-
the transactions, don't you?
Yeah.
Okay, so let's assume that the same thing's going to happen here. You ask, "How much did I make yesterday in that product?" And it comes back, and let's say that the answer comes back, and it's like, "That's not what I expected." Okay, so now what do you do?
Transactions.
Guess what? You have no transactions. You got rid of customer. You don't know what the detail is. You know the answer, and you have no way of asking why.
But you have the transactions here.
Yeah, they're over in that database on that system that's stored in that country over there, and it's organized. It's the same way that you're going to go back and get your financial history from 5 years ago. It's going to be the same process. Nobody can do it.
So I will never. I'm not going to know why and what happened.
No. By and large, there are thousands of questions asked in every business every day that people are like, I wish I could understand that.
But I mean,
Sorry, I missed the last one. What was that?
There are thousands of questions asked in businesses every day,
Huh.
but there's no data. They don't have access to the data to answer the
Are
question.
not operational data houses supposed
To
to
answer
answer
these
these questions?
questions?
So
But
answer,
we
like,
predetermined-
You're seeing your closing balance as a company, and you find out you're not okay with it.
Oh.
So you will not be.
You have to
able
go back to
manage.
the transaction.
But
But the
often you don't have the
transactions
transactions.
are
I mean,
not-
you
Yes.
can't look at it in the general ledger.
You can't look at it, but the transactions are there.
no, the transactions are where?
Either in the transaction
In
system
the
or
operating
the
system,
data
he's saying.
warehouse.
Yeah. Okay, so here's what we do. Here's what people do. Somebody once
No,
told
hold on. One thing, I mean, it's there, meaning, okay, it's in the operating system.
the operations.
The system. Eventually, since you get
No,
a
but
statement, you get a statement, every month.
Oh, no,
it has to
it-
get posted somewhere else.
In your financial
account
your bank,
plan,
yeah, you get the transactions in your bank statement. I'm talking about if I'm an owner of a product inside of a company,
Right.
I don't get some statement that gives me the transactions.
No, so but
Yeah.
typically, if you have an operational data warehouse, right? you-
So this is going to solve the problem. Okay,
Yeah.
good. Let's go solve that problem. Okay.
So OD is humongous.
But before we go solve that problem, let me tell you how we did it.
Yeah,
When the data warehouse is wrong, or
OD is even
or
worse.
something else. Here's how.
Last one.
Somebody once told me one time when we had a problem in system testing, somebody said to me, gosh, I wish we could just run the system backwards. And another person said, well, just go take the plug out on the computer, turn it over and plug it back in, the computer will run backwards. Okay. Well, the computer doesn't do that. But you know what we do? People manually run computers backwards all the time.
Yeah.
What they do is they go to the general ledger and they get this product X and they get that amount.
Yeah.
Then they go, oh, well, I don't know, I can't answer the question. So they go to this source system for that product, right? They ask somebody to dump them to Excel, all the transactions for some set of things. Then they go into Excel, and what they do is they start adding, they add a row at the bottom with a formula, and they start adding together rows of the data that they got dumped.
Yeah.
And when they finally recreate that number,
Yeah.
which basically all of that stuff was running the computer backwards manually,
Yeah.
right? Then finally, oh, I've recreated the number. Now I can begin my analysis to answer the question.
Yeah.
That goes on all over the place in organizations today. It could be 30% of the cost of financial services companies. Reconciliation, that sort of stuff. It's a huge amount of cost.
So you would do that, I'm just saying, because either you don't trust the calculation or there was some entry which you don't recognize. I mean, because you assuming you don't doubt the calculation.
Right.
I mean, I never look at the bank, ATM, I don't even count the notes normally, right?
Yeah.
I mean,
That's
so-
because our systems have been tuned so much that they're accurate.
right.
But that's
I'm worried about some entry which I don't recognize.
Right.
I mean, one of the fundamental problems I always had, and of course there is, is that why do we move data 10 times from the core system?
I'll tell
Why
you
can't
why.
we do everything
No,
in the core
but you-
system? It's a stupid question because,
you know
but
the answer. We've talked about it here.
right.
Why? What do you answer though from our discussion today?
So because the only reason is that the query that you hit, suppose the query you said, right?
You can say this more simply. Here's your answer. Why do we do it?
So, because it's too much of cost.
Cost.
Yeah.
It's cost.
That's the reason
We
we are
create
aggregating
balances.
and keeping it in some place.
We create balances because they're cost effective.
Yeah,
And we've been doing that for
I know.
we've been
I
doing
know,
that for 40, 50 years.
Right,
That's why we do it.
right,
That's why our systems were designed to do that.
right. But
But then now the cost, see our cost curve, remember that,
It's declining.
the first graph I showed you, right? Compute cost has dropped, data has increased. Guess what? We're up here.
Yeah.
We've got more data, and the balances aren't serving us well for the problem we're
That's
solving.
exact. So that is the thing. So it's a time to challenge.
So what you have to do is you have to attack the data side of that problem.
Yeah.
Yeah.
The balances are the problem. Okay, let's go to the data warehouse.
Yeah.
Okay? So in our operational system from 5 p.m. to 5 a.m., okay, we get all these transactions, we do the posting process into the operational master file. Okay? That's by customer ID, customer numbers. Okay. Now, because we have to do tens of thousands of things here, we can't do millions of things. We take all of those and we aggregate them to a single transaction. Okay? Now, the other thing that we do though here, because we're doing accounting now, is we take transaction A, which is a debit, and we create transaction B, which is a credit. Okay, so now at the end of this process, I've put those into the general ledger, made balances there. Now we go over to the data warehouse. Okay, I copy this to the data warehouse. I copy that to the data warehouse. I copy all of these transactions to the data warehouse, and I copy my ledger to the data warehouse. And then here, I've used ETL. Okay,
Yeah.
what is the chances that this ETL logic matches the logic
ledger.
that the accounting rules engine logic that made this? The chances that they're equal are
Oh.
about 0.
Yeah.
And so when you get the balance, somebody said for product A, how much did I make? Oh, it's in the data warehouse. my product A is this number,
Yeah.
right?
Mm-hmm.
And I want to go see what that is. What do they get drilled down to? Well, they go see this transaction here.
Yeah.
Well, that doesn't tell me anything. And then they say, okay, go show me all of these.
Right.
And what they end up seeing is, wait a minute, I can add up all of those, and it doesn't equal this because it was done with different logic. This number was created in a different way than these numbers.
Right.
So guess what they do? Well, they dump the data warehouse data to Excel, and they start adding together rows of data until they recreate the number. And once they've recreated the number, then they're finally ready to start doing analysis.
But one question also, for example, so I've seen this in Indian banks more, right? So the moment you do either a debit or a credit transaction, even a credit card transaction gets reflected immediately, right?
Well, I'll tell you how that happens.
So-
What most often happens is not that they update the master file. What they have is they have today's transactions. Let's say that these transactions actually happened from 8 a.m. until 5 p.m. What they do is they do memo posting. If you take that transaction and you add it to yesterday's balance and you make a temporary copy to show on the ATM,
Right.
you show the effect of what will happen with the posting process.
Right.
But they don't go update the master file at that time,
Yes.
because they want to have high control and they want to know when they update the master file, I updated it correctly and I've reconciled everything.
Yes.
So they do memo posting to give you those balances throughout the day. Okay, that's an hour of talking. This is the problem we're trying to solve. This problem is hidden in every business system there is.
Yeah.
And their system has been running for 10 years and it's radically different. It's proven that it's different.